Welcome to House Talk on KAFM 88.1 Community Affairs. This is a monthly program that features local experts to discuss real estate topics of interest to home buyers and sellers in Mesa County. I'm your host. I'm Kate Porras. I'm a realtor at RE/MAX 4000. We have our guest in the studio today, Jim Kaiser with Cherry Creek Mortgage. Jim, we've got a lot of information for both buyers and sellers, but before we get started, give us a little bit of information about yourself.
Hello. Thanks for having me on. Been in the business for 23 years. And been in Grand Junction for the last 8 years. And I was lending back in the mid-'80s when rates were in the 13-14% range.
And we're going to talk a little bit more about that because I think it's really important that we put that into perspective with what we're seeing today.
Yep.
But we're talking about low inventory. We've had some good discussions lately about buyers out there. We've got low inventory. We've got what feels like higher interest rates. It's making it a little bit challenging for some buyers out there.
Yes. One of the things that's interesting is I went back and looked at historical rates. And if you look at our rates today, we're somewhere around 7%. But even just 10 years ago, that's when we were in the threes. But if you go further back, our rates today are very similar to 2006. So being in the high sixes. And then previous to 2003 on, rates were in the 7s, 8s, 9, 10% range.
I think that's why, like I said, it feels like the rates are high because we came from these historic low rates, somewhere in the 2s, 3s, and then we made this big jump in just a matter of a couple months up into the 5, 6, and 7s, so that span feels like a lot. But when you're looking at those numbers historically, we're normal.
Not too far off. Even in 2019, we were in the mid 4s, high 4s, low 5s.
And we don't even want to talk about earlier in the history when we were talking about, 14, 15%, because it did happen.
It did happen.
And a lot of people I know when we started inching up these rates, last year, there were some people that were really concerned that we were going to get back into those rates in the teens. And we didn't see that happen.
Haven't seen that happen. We're hoping it still won't.
I know that you've been dealing with buyers who are waiting because they are concerned that the market's going to crash and that if they buy now, they're going to be in trouble because the market's going to crash. And this has been a discussion for several months now, really almost a year. What are your thoughts on that?
So in 2008, 2009, when the market did crash, which is really one of the few times it did, and that's because of lending practices. We were doing 120% loan-to-value loans, interest only, negative amortization. So all of those practices have gone away. So for the possibility of the market crashing, I think is minimal, if none at all. I do believe that, and I was trying to come up with, we were talking earlier about something to say, because I think anyone that's thinking about waiting right now, I think you're going to be waiting forever. Because if you buy a house today versus waiting until interest rates come down, I think what's going to happen historically is when rates come down, house prices go up.
Right.
Yeah.
Well, we're seeing it with this pent-up demand for these buyers who are waiting because of interest rates. So there's a whole list of people out there, nationwide and here in Mesa County, that want to buy a home, but they're waiting. There's low inventory. So if those rates come down, you're then going to unleash all of these buyers into the market that have been waiting, and then you're going to have that demand go up. And we all know what happens when that demand is up and supply is down.
Multiple offers, higher price offers.
Yeah.
Yep.
Flashbacks to 2020, 2021,
right.
Even a little
Not
bit
too long
into
ago.
2022. Yeah. You're listening to House Talk on KAFM Grand Junction. In the studio today is Jim Kaiser with Cherry Creek Mortgage. So, Jim, I want everybody to run real quick, grab a pencil, piece of paper, because I want you to put some numbers to this. We're going to do a little bit of math here. And if you don't get it all at home, right now, remember, you can always listen to podcasts on demand and get this information again. But you brought up some really good numbers to kind of paint a picture for us of what it looks like if you're to buy now or if you're to wait a year or so. So I'm going to let you show us how that works.
So first of all, Black Knight had a report that the national appreciation prior to COVID was about 3.8%. So year over year, your house would appreciate almost 4%. Of course, during the COVID years, that was crazy. I mean, we're 17, 20% per year.
And that's not normal.
Not
again.
normal, right.
But 4%, 3-4%
is
normal.
Normal. So what I did is I took let's say you bought a house today for $300,000 and you were able to get a rate of 6.99. Your principal interest payment would be $19.34 per month. And if you say, well, no, I want to wait until next year when rates are in the low 6s or high 5s, Well, what happens when rates come down? Let's say houses do appreciate by 4%. So that same house for 300,000 is now selling for 312,000.
Got to pay more for the house.
Got to pay more for the house. So let's say the rate does drop to 5.99. Great, you got a lower rate. Well, your principal interest payment would be $1,812. So yes, you're going to save $122 a month waiting a year. However,
yeah, it seems like a good deal.
Sounds like a good deal, right? So if you take that times 12 months, you've basically paid an extra $1,400 over the last 12 months for that house. However, you gain $12,000 in equity.
You had to pay $12,000 more for the home.
Exactly. So I would think that if anyone wants to invest $1,400 to gain $12,000, that seems like a good deal to me.
It is, and sometimes you have to actually just get that paper out, write it down, look at it, and see how those numbers actually work to realize that now is actually a good time to buy. And you mentioned before, if you really think about what the market was like in 2020, 2021, even part of 2022, a lot of people, the words that I were hearing from other real estate agents, from buyers, sellers, chaos, stressful, frustrating, because you were having these multiple offer situations. People were having to come in over asking price. It was a challenging market for a number of reasons. And so maybe you want to get into the real estate market now when it's a normal market instead of having to deal with that situation again.
Yeah, I remember just a couple of years ago, some people that probably put 12 offers on different houses.
Yeah.
And
they were getting beat out.
Yeah. And now most people are able to find that house in the first or second house.
Yeah. You're listening to House Talk on KAFM Grand Junction. In the studio today is Jim Kaiser with Cherry Creek Mortgage. So let's switch gears just a little bit and talk about sellers, because part of the problem is we have these sellers that they're in love with their mortgage payment, not necessarily in love with their house. What are some things that sellers should be thinking about at this point?
The one line I love, I've heard this a while ago and I used it. It's a forever loan is not a forever home, or vice versa, excuse me.
I like it.
And so, even if you buy a house, you get rid of that 3.25% rate to go find that perfect home, and maybe you're at 6. You can always refinance down the road. And the other thing I'm seeing too is sellers are motivated at times, and you might be able to get some concessions so you can buy your rate down, and maybe you can be in the 5s. Even buying a rate today.
Yeah, let's explain that, because I think that's a scenario that some people may not quite fully understand, this whole term of seller concessions. What does that mean for a seller or a buyer?
So quite often I see people, they've listed their house for $400,000, and let's say it's gone 2 weeks and there's no offers. So they panic, and now they want to lower the price by $10,000. Well, instead of lowering the price by $10,000, take that same $10,000 and offer it as a concession. And those concession, that $10,000, the buyer can use to buy down their rate, and substantially at times. I've still closed on some loans recently at 5.5, 5.25, because they use that money to buy down their rate. Yeah.
And so it makes it so it's more affordable for the buyer. They can get into the home they want, have a payment that's more comfortable for them. The seller walks away with the same amount of money. Doesn't matter if you're reducing purchase price or offering concessions. The actual money that the seller walks away with is the same.
Exactly.
It's just how we structure that offer, structure that contract so that it works for both sides.
Right.
Absolutely. So, we talk about real estate just being a good investment. Give us your 2 cents on that.
So I did see a report a while ago, and I'm not going to be probably exact with this on the information, but it was something like over 70% of people that have over $500,000 in net worth, that guess where the majority of that comes from? It's real estate. It's not money in the bank. So it's still, in the long run, probably one of the best investments you can ever make to build equity.
And as we mentioned earlier in those statistics, there are so many Americans right now that are sitting on a whole lot of equity. I think that kind of takes away some of that fear that people were having that we're going to have a big foreclosure crisis here too, like we saw. Everybody wants to compare us to 2008, 2009, to the big crash. Right. It's a totally different scenario. We have all this equity in the market right now. If people got into trouble, instead of having to foreclose, they could sell and probably walk away with money in their pocket. And it just sets you up for a lifetime of really good financial stability if you do it right.
Right.
Well, if people want more information, there's a lot that we could talk about and keep going on forever. If people want more information, what are some resources? How can they contact you? What are some things that they can look at?
Sure, they can contact me on my direct office number, which is 970-256-0080. And they can also go to my website, which is jimkaisermortgages.com.
All right. And this segment airs on the second Wednesday of each month. You can also listen to podcasts on demand at kafmcommunityradio.org. Make sure, of course, to join us next month for another edition of House Talk. If you have any topics that you want to know about, you have questions, feel free to reach out. You can go on my website, kateporras.com. You can also give me a call, 970-985-8555. And, of course, we'll see you next month.